wake them up. I don't know if you guys know this, but I tend to get excited. It's funny. The video is going, and I remembered to hit record, guys, so this one will be recorded. Say some smart stuff. And we're going to do what we do every day, guys. We're going to check news. Forexfactory.com/calendar. Let's see what's going on in the wonderful world of psychosis, guys. And today, Friday, October 24th at 9:45 a.m., guys, Flash Manufacturing PMI, Flash Services PMI. And there is a really good chance that the market may spike, that the market may become untradeable, that the market may just fall outside of its norms. I took this picture from this morning. This was the NASDAQ when news released, from 340 all the way up to 520. You math people will recognize that as a 180-point spike just based on news. So every morning I check news and I make sure that I don't step in front of that freight train of emotional crazy. And guys, my class tends to be very consistent. My class is very much the same thing every day, guys, and I'm going to pull up my slideshow here and we're going to talk about it. Every morning, the focus is to teach you to read your charts. So if you are with me in this room, I want you to know that my job is to teach you to look at indicators, to recognize advantages, and then your job is to turn those advantages into trades. This is an educational room. It is 100% for educational purposes. Here's one for the lawyers real quick. Educational and informational, guys. One thing that I will never do is I won't call trades for you. I won't tell you when to enter the market. I won't explain to you how to manage in the heat of battle, guys. That's your job. So I'll just throw this in the room. That's for the lawyers, just to make sure you guys understand that at any moment in this room, it's all education. And what I'm doing is I'm teaching you guys to read your indicators. Using a checklist with 3 rules on it, guys, only 2 charts, you're going to build a foundation. And you're going to learn to read your indicators. You're going to learn to recognize advantages. And these advantages become your trade. And chart reading is about 90% of your day, guys. And some would bet against that and say, you know what, Mark? I would say it's 95% of my day when I'm having a good day. When I'm successful, I'm doing very little. And your chart reading is going to help you understand by looking at these indicators, by recognizing advantages. I feel good, Victor. It's just my voice recovering. You know when you've been sick, and then when you get out of sick and you start feeling wonderful, there's always that residual. And your voice is like, all right, you know what? We suffered for a week. I'm gonna make you suffer one more day. That's where I'm at. I'm also, Victor, trying to not project. I very much have that theater kid voice where you throw it out into the distance so the people in the back row can hear. And I've got 3 sleeping people 15 feet from me, so I'm trying to be a little respectful. And if you guys can't hear me, let me know. Guys, when you learn to read your indicators, you're going to understand. I know, it's weird, right? Trust me, it's weird for me too, Jen. I'm an exciting guy. I'm like, I want to get out there. So I'll tell you what, if they wake up, they wake up. They can go upstairs and sleep, guys. You're going to understand through your chart reading. You're going to understand where the market is likely to continue. You're going to understand where the market is likely to go. You're going to understand where the market is likely to stop, guys. And it's really important that you focus on that word likely. It's likely to continue at this point. That's going to become entries, guys. It's likely to go to this point. That's going to help with management. And it is likely to stop right at these key areas that you'll know about long before the market gets there. And guys, that's what holds you in that 90%. I've made an addition to my slideshow. And this is really important, guys. There's 3 ways you can look at the market when it's time for a trade. You can hear me? Okay, yeah. No, we're okay. I feel amazing, Victor. I really do. I feel awesome. Sounds like there's a hookah in that room. Not yet. Trade probability and management, guys. There's 3 ways that you'll use these core concepts to look at the market when it's time to take a trade. A high probability trade. Guys, this is when all indicators on charts align with the rules for the trade. That's the best. That's the best of the best. This is what I teach each and every morning. I teach you to recognize a high probability trade. I focus on the one that optimizes your chances of success, that has the best probability for winning, guys, because they say that confidence comes from the memory of success. Now, when you understand the high probability trend trade, it opens doors for the medium probability trade, guys. And the medium probability trade means that most of your indicators align for the trade, but a small issue exists. And that's really going to be saying one advantage is gone. And this will be the majority of your trades. I'm going to tell you right now, you're going to get the best so that you can find the rest. And then you're also going to take your chart reading and you'll be able to say to yourself, man, this is low probability. Conflicting signals, my chance of success is reduced. And there'll be a point in your trading where you're like, why on earth am I taking a trade that is literally labeled as low probability? If my chances of winning aren't greater than my chances of losing, should I enter this trade? And guys, these two options come from your ability to understand the high probability trend trade. So what I do each and every morning is I discuss rules. I discuss rules. I talk about rules for TradingView, and I talk about rules for excuse me, NinjaTrader, and I lay out the best of the best for you. Everybody in the room has the ability, Pete, little panic there. Everybody in the room has the ability to simulate, guys. You can practice, you can go through these rules, you can practice these rules, you can take pictures of these rules, you can annotate what it looks like to have your rules met. And then the first step in becoming a confident trader, guys, is post it in the room. Show me how you're reading your indicators. Man, Chris is awesome, isn't he? Good. I'm glad that he was there to take care of it. Guys, post in the room. Show me what you're doing. And there's 18 people in this room, and there's 4 of you that actually post in here, guys. Take the time to say, Mark, this is how I read my indicators. Hey, Mark, this is the trade that I took. Mark, these are the advantages that I saw. And what you're doing is you're saying, hey, Mark, you've been doing this for a long time. You've seen a tremendous amount of patterns. Am I reading my indicators right? Do you see anything that I could do just a little bit better? Maybe to reduce risk a little bit, maybe to maximize profit potential a little bit. And guys, every time you post in my room, it literally is a private session. And I can tell you, having done dozens and dozens of private sessions, I don't say anything outside of the room that I won't tell you in the room. There's no secret handshakes. There's no, yeah, let's not tell them about this rule. Guys, it is literally everything that you need to be successful with the software. I just need to know how you're reading it so I can give you the help you need. And then simplicity, guys. This is the next step. The plans that I'm going to give you, and I'll drop them in here in just a second, I'm giving you what's called the KISS plan, guys. Most of you will recognize the acronym. Keep it simple, sunshine, right? The most basic, the highest probability way to do something, the most simple approach, guys. And both of these plans, and I'm going to say it again, are stepping stones in your learning journey. This is not the only way to trade this software, guys. This is the highest probability way. It's designed to optimize your chances of success. And again, it's not even the only way you can take a trend trade. It's the best way to take the trend trade. And then through study, simulation, class feedback, and continuous practice, you will write a plan that suits your needs, guys. Everybody does. Everybody learns that very basic trade, and they learn to speak out in terms of advantages. This is what's great. This is why it's wonderful. And then from the very core concepts that we're learning, that we're about to go through right now, you'll be able to find more, to see more, to do more, to manage differently, guys. So build that strong foundation. And what you need to do is you've got to learn the looks. You've got to know what it looks like to have your rules met. So I also gave you spreadsheets, guys. And the page you're looking at here is 500 pictures of Nexgen users taking trend trades, using advantages, executing. And what you'll notice is that the entry looks the same on every one of these because it's just a pattern. You're also getting, if you're in trading view, the trading view, guys, and there's pictures of exactly what it looks like to have the rules met. So the easiest way to get to where you're going is first and foremost, post in my room, ask questions, guys. Don't be afraid to post losers. Losers are where the best lessons come from. And this classroom just goes above and beyond when you guys participate, when you don't force me into making it a lecture, but it becomes a discussion, because the question that you're wondering is the same question 10 other people are wondering, and it makes for a better educational environment. And then keep it simple, guys. The plans that you're given are designed to optimize your chances of success, to give you the highest chance of wins. And that success is what creates confidence, guys. And it's that confidence that keeps you from hesitating. It's that trust in the methodology that gets you focused on the best of the best. And what most people find is that the less they do during the day, the more successful they tend to be. Victor, you said it must be Halloween. Your TV jumped into a sell trade and you were not touching the keyboard or mouse. This thing does weird stuff once in a while. Lost $10 on it. Victor, sometimes people try to take partial contracts and forget to cancel out one of the contracts, and that may be what happened. I've done it. I actually came back and I blew out an account because I forgot to cancel a partial contract. So possibly that's what happened, maybe. Or maybe your house is haunted. I don't know. So guys, what we're going to do is we're going to learn rules. You guys can simulate and practice. Post in my room, ask a million questions. Tell me what you're doing. Keep it simple, keep it focused. Guys, take a lot of pictures. The people who take the most pictures typically get to where they want to be the fastest. I am 17,195 images. And almost every one of these, or the majority of them, are annotated, talking about exactly what I see, talking about exactly where I entered, focusing on exactly why I did what I did. Because what happens is that repetition, guys, that idea that you can take a very simple concept, drill it into your brain, cement it into your memory, it slows the market down. It makes the market way less intimidating. You will call your shots, and you'll get to a point to where you demand the market give you what you need rather than hoping the market gives you what you need. And you're going to do that on NinjaTrader. We're going to do NinjaTrader first. And it only takes 3 rules to define the highest probability trend trade possible. Each rule, when met, defines an advantage. It is a look that lets you know an advantage is present. And the recipe for a trade is momentum plus a clear path plus an entry. It's only 3 rules. Once you understand these first 2 rules, once you can identify momentum and path, guys, that's when you have the keys to the kingdom. You've got the magic beans, the golden goose, however you want to say it. But once you understand momentum and path, you really do have what you need, excuse me, to see more, to do more, to find more, to manage more aggressively, more assertively, guys. So build your foundation and then give yourself permission to grow from that foundation, to find medium probability trades, to take them a little differently, to manage them a little differently. But let it all be rooted in your ability to understand 3 very simple concepts. These 3 simple concepts only take 2 charts to be proven true. There is a large chart. There is a small chart. Your large chart, I do know the difference between big and small. Your large chart is a very slow moving chart, guys. It's a broad stroke of a brush. You're painting the living room wall, excuse me, but you're staying away from the light sockets right now. It's showing the general opinion of the market. Your large chart through 1 bar, the most current printing bar, will define direction, it'll find momentum, it'll define areas, guys. Rules 1 and 2 are met on the large chart using 1 bar. I can't make it any more simple than that. When the first 2 rules are met, and if you really want to give yourself the highest chance of success as a brand new user, throw that word only in there. Only when the first 2 rules are met, when I have momentum and path, will I turn my attention to the smaller, faster chart. Excuse me just 1 second, guys. faster chart. This chart is going to show you the inner workings of that one bar. So you'll make decisions to take a trade when the bar is down here. But with absolutely none of your advantages going away on the large chart, your small chart will show you a retracement typically. That's just a small pullback, counter to everything the big chart says. It'll very often show a bounce and continuation. And all of this in the yellow box here happens inside of one bar, guys. It is a refinement process that allows you to pinpoint exactly where the market is most likely to continue. And it's what allows you to reduce risk, and it gives you the ability to maximize your profit potential. And we do it because, and I'm going to tell you, I'm going to be honest for a second. Sorry, this is going to pick up on the video. It pisses me off that I'm not in charge, guys. I want to be in charge. I want to be the guy that dictates where the market's going, where the momentum is, if I'm going to turn around or not. But the reality is, guys, I have zero influence. The market doesn't know I exist. The market doesn't care about my position. The market couldn't care less that I've got a mortgage payment coming up. The large crowd, the large chart, guys, it's going to do what it does. It's the men and women who control the market, who create the trends, who establish momentum, who react at areas. Your plan is designed to have you trading with the large chart. Your small crowd, small chart, guys, these are the people, they still don't know you exist. They have way more money. Your two contracts doesn't mess up their day. And they create these little ripples in the matrix. It's called a retracement. Once again, excuse me. And when everything is up here, your small chart shows a little down push. And it's not a reversal in the market, guys. It is a lapse of judgment. And the small crowd has these from time to time. Your Rule 3 entry is designed to pinpoint right where they're most likely to fail. This becomes your entry for the highest probability trend trade. Ron, you're killing me. This becomes your entry for the highest probability trend trade you could ever take with the software. It takes indicators to get the job done. You guys are killing me. I have been hookah free for a while as I get through this yuck. Both charts will have areas, guys. There are divergence highs, red Fibonacci resistance, yellow 1-to-1s, Fibonacci support, divergence lows, horizontal lines on your chart. That's how we define areas. You don't need to know what creates them. You don't have to know the programming, the math, anything. You don't even have to know what a Fibonacci is to know that Fibonacci resistance could stop the market in an uptrend, guys. And divergence, I want you, every time you hear the word divergence, to think loss of momentum. So if it's a divergence high, the buyers were in control and the sellers just stole their momentum. It's a byproduct of the large chart fight. Divergence low is the same thing at a low. You're going to use these areas on the large chart to define termination conditions where the market is likely to go. And on the small chart, you're going to use fibs and mid bands and 1-to-1s. And these are going to become entries for your amazing trades. And then you're also going to use trigger lines, guys. And trigger lines do all the heavy lifting. Trigger lines show up in every rule. Trigger lines are like the best of the best. These are the elite. And guys, there's only two types. There's a small trigger. It's two solid lines. It's a fast moving average. There are large triggers. It's two dashed lines. They're a slow moving average. Again, I don't care about the math that goes into them. Doesn't matter to me what the numbers are. But the reality is you're going to use these to define momentum. You're going to use these to define termination conditions in rule number 2. You're going to use these large triggers to define entries in rule number 3. Ron, you said that even during the psychosis of news, hold on, you know I got to bring it up now. Even during the crazy of news, Fibonacci did its job. Oh, you know what? I think I don't have my data series on. I think we were doing some entries. No, it's there. So even during news, Fibonacci resistance stopped the market. Even during news, Fibonacci support stopped the market. That's pretty outstanding, isn't it, Ron? Look at that. Even during news, from resistance breaks, pulls back to support. Oh my gosh, what an advantage. Have you guys ever heard the old adage, buy low, sell high? Buy low, sell high. Well, congratulations, my friends. You're about to learn how to identify high and low and have rules to take advantage of it. So we're going to break down each rule individually, guys. I'm going to gasp for air every now and then, but the large chart leads the way. I can't stress this enough, guys. The large chart just tells you what to do. And it starts with strong trigger lines. That's rule number one, because when I have strong trigger lines, I have the advantage of momentum. And strong trigger lines, I think, still to this day, is the easiest lesson ever. So I'm going to go through one picture, and you guys are going to be able to identify on a large chart a market that's going to be just super hard to stop. Background color behind the most current bar is the first thing you're going to do. So when I look at a large chart, let's not make the arrows the same color. Let's stand out from the crowd, right? If my background is green, I'm in an uptrend. I'm only looking for rules to be met for high probability trend trades long. If my background is red, I'm in a downtrend. I'm only looking for rules to be met for high probability trend trades short. Notice that I said only looking for rules to be met, because my rules create the advantages that give me the edge, guys. In an uptrend, in order to identify strong triggers, it has nothing to do with Fibonacci. Don't care about price bars. It's nothing more than these trigger lines. My small triggers break above and away from large triggers. The large triggers are wide, and it looks like a pair of scissors that are open. And guys, when scissors are open, you can cut. In a downtrend, small triggers must get below the large triggers. Large triggers are wide, space between the two. And when the scissors are open, you can get some work done, guys. You can cut. They can cut you a check. So it's the separation between the small and large that lets me know that the odds are favorable for the market to continue up. And it's the separation between the small and large in a downtrend that lets me know that the odds are favorable for the market to continue down. And when you have odds favorable momentum, guys, it is difficult to stop that market. The large crowd is a freight train, and they are just steaming to the upside or the downside. Odds favorable momentum, you're going to hear that in the room a lot. That's the look that we need to break those key Fibonacci areas, to watch a market continue. And odds favorable momentum, guys, I'm going to tell you right now, it's going to cover a lot of the mistakes that we all tend to make as new users. And you will make mistakes, guys. It's okay. I still make mistakes. But this will cover some of them and make those mistakes turn into luck. When you have those strong triggers, guys, these tails on that large chart, if you remember that refinement process, these tails are that pullback for your great entries. You're going to be able to pinpoint where your entry needs to be, and you'll be able to pinpoint right where that tail is most likely to finish and form, and the market just continue with all that momentum. We'll talk about that in rule number 3. But the idea of momentum is that there is separation. And when separation goes away, excuse me, when the scissors close, guys, you can't cut with closed scissors. You're just taking a stab at it, right? When the scissors close, these are weak triggers. Anything can happen up or down. The difference between strength and weakness, advantage, no advantage. If you keep it very black and white as a brand new user, if you keep it very focused as a brand new user, and I want to throw this out there, guys, because I don't ever want you to think that this is the only way to trade the software. When you learn these basic concepts, and Sergio, we saw this one before, right? When you learn these basic concepts, you'll be able to use trigger location to say, hey, this is the best of the best. And hey, this is not the best of the best, but there's opportunity between those 2 points. Man, 1 second, guys. Sorry, YouTube. All right, let's hope my voice makes it the duration. So odds favorable momentum is always the best look, guys. This is the strongest look, the hardest to stop look. Weak triggers are where anything can happen, where key Fibonacci areas are more likely to hold. But there's a whole gamut of opportunity between strong and weak. And as you grow with the software, you'll be able to find it, to take it, to manage it. But in the very beginning, my friends, let it be strong or weak. Let it be rule number one met or rule number one not met. Is everybody good with that? That's the whole lesson on momentum. It's identified on the first bar on the large chart, the most current bar. And here we go. Smalls above the large, separation. Does everybody see that? That is strong triggers. That is rule number one met without question. Yep, awesome. Rule number two says don't trade into areas, silly. Don't trade into something that could stop the market. Don't trade into a termination condition. Make sure that you have room to profit targets. We're just going to call it a clear path, guys. A termination condition is a large chart scenario. Areas are defined on the large chart, guys. And these areas are where the large crowd are making decisions. These areas are where buyers buy and where sellers sell. These areas are where fights are most likely to happen. These areas are where reversals are most likely to occur. And because you are respecting the large crowd, because you believe that they could change the direction of the market, you're going to let them get to an area before you call it a termination condition. You will let price bars reach Fibonacci resistance, divergence high, yellow 1-to-1. You will allow the price bars to get down to Fibonacci support, yellow 1-to-1s, divergence low. And guys, when price reaches an area, here we go. I'm going to do this today. It's Friday. When price reaches an area, this is the language that you have to learn. I'm done with price. I don't need price anymore. Price is 100% irrelevant in my life. When price reaches an area, your trigger lines will tell you everything that you need to know about that area, guys. So you're going to get into a position where you start counting triggers. And if none of your triggers, a big goose egg, have made it through resistance or have made it below support, guys, that's a termination condition. That is textbook. This is an area that could create a big, ugly, untradeable bounce. This is an area that could reverse the market completely. This is also an area that could break. And the reality is you will never know what the market's going to do. You'll never know if it's going to smash through or if it's going to reverse or if it's just going to bounce for a little bit, guys. And in a live market, it's going to look just like that. Price reaches the area. Where are my triggers, guys? When none of the triggers break through, be cool with doing nothing. Be okay with the idea that it's all right to wait a second. Absolutely no trades into the area. But areas break. Guys, areas have to break. If areas didn't break, we would be stuck in the same spot for eternity. And it'd be like the world's longest Pong game. We don't need that. So as an area breaks, again, you'll use the trigger lines to help you understand the condition of that area. But before I go to that, I want you to know that the termination conditions, that very basic recipe, rule number 2, has been put together over tens of thousands of pictures, guys, over thousands of live trading hours. And the reality is that if price reaches an area and your triggers don't break, you are more likely to lose than you are to win, which means that your advantage is gone, that you no longer have an edge. So as a responsible investor, lean on the edges, guys. And this is what it looks like when it breaks to the downside. So number 1, notice there's a big stop sign. Price reaches support, triggers are still above. This is a termination condition. Wait to see what the reaction is. Your highest chance of success comes from doing nothing, and I know that's counterintuitive. When the small triggers smash through that area, guys, with momentum, the potential to break is there. The large triggers are still above. This is what we call a 50-50 look, guys. This is the second look, the second trade on the KISS plan that I gave you. And I'm going to let you in on a secret. When the small triggers smash through, the potential is there. But if one of the large triggers is also breaking through that area, that's your best of the best look. And that's actually the requirement for that medium probability trade. Your path isn't clear. You're not rule number 2 met until all 4 triggers get below the area. And when all 4 triggers get below support, support behaves as resistance, guys. It's done. It's in the rear view mirror. If the market pulls to it, you're going to count triggers again. And guys, this is your best of the best look. And this is what it looks like when an area breaks. It's always a termination condition first. If you are not already in a trade, absolutely no trades into that area according to the plan. With 3 triggers through and a lot of momentum, you can trade that potential. That's that medium probability trade where most of your indicators line up. However, small issue exists. But when you have the clear path, oh, best of the best, guys. And your path will remain clear until you reach the next area. So first, it's a termination. Be all right not being in the market, guys. Be comfortable not always being active. Then it's the potential, and then it's a clear path, guys. And once it's a clear path, that's the best of the best. That's the highest probability. That's the one that's mandatory for you to take a trade and call it a high probability trade. And clear paths, thank you, Sergio, for this. They come from 2 different looks. We talked about areas breaking. Let me get back to where my pictures. We talked about an area breaking, creating a clear path, letting the triggers get through. Well, guys, you can also have a clear path from a reversal. If you go from a termination and the triggers roll and everything changes direction, guys, and there's nothing in your way, your path is in fact clear all the way until you reach the next area. So sometimes you'll be waiting for areas to break. Sometimes you'll have your clear path from a termination. This is the best of the best. That's what we call a strong top and a strong bottom. When that termination reverses the market, guys, that sets you up for the highest probability trend trade ever. And now the big warning, the reminder. There will be times, and this aggravates all of us, there will be times when your path is not clear because maybe the areas are stacked. Maybe there's a couple fibs and a divergence low. Well, maybe there's even a 1-to-1 in the way too. Guys, this is 90% of your day. And new users, hear me. If all you're looking for is high probability trend trades in the beginning while you learn these advantages, you're going to get frustrated that there's so much stuff in the way. But once you learn these very basic concepts, once you can understand momentum, path, and entry and piece them together, there will be times where you're able to capitalize on this look, guys. The futures markets exchange in the markets an average of $220 billion hourly. It takes $400 a day to put yourself in a 6-figure income. If you don't see the potential to make $400 a day with what we do, you're not studying, guys. You don't need every move. Focus on having your rules met. You don't have to be the first one in. You don't have to hope an area breaks, guys. Find the easiest. Find the trade that fits your rules. Learn how to do it easy so that you can learn how to do more. So we are done with the large chart. When the large chart has momentum, when the path is clear, and let's do this real quick. I want to go back to that picture here, to that. When the large crowd says that they're going up strong, and there's absolutely nothing in the way, guys. When you have a freight train and there is nothing on the tracks for 1,000 miles, this is where the small crowd steps in, guys. This is where we typically see those fluctuations, those little retracements. So rule number 3 is very specific language. And if I were a brand new student, I would write down this phrase so that I never miss an entry. I would say, I'm going to use a limit order, which means that I can actually wait for the market to come to me. I call my shots. And I'm going to buy or sell a pullback, and I'm typing this into the room right now. That's that little retracement created by the small crowd. And I'm going to do it at an area, at a fib, at a mid-band, at a yellow 1-to-1. And that area will be inside, and I'm going to capitalize that one, inside of triggers. And if you learn that phrase, if you commit it to memory, if you say it out loud every time it's time to look for a trade, you will know precisely where your entry is, typically 3 or 4 minutes before the market ever gets to your entry point. So we're going to use a limit order to buy or sell a pullback right in an area inside of triggers, guys. And this is where the phrase triggers or moving averages comes into play. Because when price pulls away from moving averages, price typically returns to moving averages. That's what gets us back to the triggers. The triggers aren't bouncy. The triggers are like clouds to a skydiver. It's the areas inside that behave like the brick wall and price is the tennis ball. And guys, it's the areas inside of triggers where trades originate. You'll be able to pinpoint it, you'll see it, you'll know about it long before the market gets there. And if these trigger lines, large and synthetic, it's just the large triggers from both charts, if they are overlapping one on top of each other, like two snakes riding piggyback, you can say, I'm going to buy a pullback at an area inside of favorable large triggers, because the tighter these triggers are, the least amount of risk you're going to have on a trade. The least amount of room there is to put an area inside, the smallest risk, the most accuracy that you're going to have. That's the best of the best. It doesn't always happen, but when you see it, you should get excited. And now what we're going to do is we're going to describe the entry pattern. And that's all it is. It's a pattern, guys. Everything that we're talking about is a pattern that is predictable, that is testable, that is repeatable, that you can prove wins more than it loses. Your entry pattern begins with a reversal bar. A week into studying this pattern, you'll start calling your shots when the market is all the way down here. But a reversal bar begins the pullback. When the reversal bar prints, you can say the market is most likely to retrace, price is most likely to return to these trigger lines, somewhere from the top line to the bottom line. I don't know where it's going to be, guys. I don't have a crystal ball. But I can say without question that market may go all the way to the bottom of those triggers. And then I say that phrase, I'm going to buy or sell a pullback at an area inside of those triggers, guys. And here I have a mid-band, and here I have yellow 1-to-1s, and it creates a little window. There's some space between those two. I call it the window of opportunity because it really does. It accurately describes and pinpoints right where the market is most likely to bounce and continue with the large chart trend. And it could be that mid-band, and it might be those yellow 1-to-1s, but because of the strength on the large chart, because of the clear path on the large chart, my job, if I'm following rules, is to activate a limit order right at the top of that window, closest to the reversal bar, and that becomes my entry for the highest probability trend trade. And now I want to explain something about anything that wins 70 to 80% of the time. You can pinpoint where the market is most likely to retrace. You can define where the market is most likely to bounce. And because you guys are so stinking brilliant, you've also defined where the market should not go. If this is going to be part of that 70 to 80%, guys, the market shouldn't get below the retracement zone. The market shouldn't get beyond those areas inside of the retracement zone. So what you're going to learn is that any lines beyond that entry, any lines below that window of opportunity, beyond those triggers, trades, high probability trend trades are not entered from the wrong side of the triggers. That's where the advantage of rule number 3 is no longer in place. So you're going to have to train yourself to ignore Fibonacci on the wrong side of the triggers. Guys, you're going to have to train yourself to ignore yellow 1-to-1s, mid-bands on the wrong side of the triggers, because once you get beyond that area, that window of opportunity, that point where the market is most likely to continue, guys, rule number 3 is out the window. You don't know if, when, or where that market may continue in the direction of the trend. So reversal bar, define retracement, define the bounce points, get in closest to the reversal bar, guys, and hope the small crowd can't push through all the goodness. Begins with a reversal bar, not at all your entry. This is a loss of momentum that gets you to your entry. Reversal bar, define where the pullback is most likely to go, where price is most likely to retrace. Define where it's most likely to bounce. And guys, what an amazing time when you have one area inside of triggers. You know exactly where your trade's coming from. Activate that limit order just below that point, closest to the reversal bar. And learn to ignore things on the wrong side of the triggers, guys, beyond the triggers. That's where the market shouldn't go. Your advantage is no longer in place. And when I talk about high probability trend trades, guys, when I focus on this best of the best for my brand new users, what it does is it not only sets you up to take a trade that's going to increase confidence through the memory of success, to take a trade that you can prove typically wins 70 to 80% of the time, it starts you on the road for management. It starts you on the road for speaking in advantages and saying to yourself, man, if they can get through the perfect entry, I don't want to be in that trade. And your initial stops in the plan that I give you are placed beyond those triggers, beyond that window of opportunity where the market shouldn't go. And again, the realities of trading, guys, is that anything that wins 70 to 80% of the time, it's obligated by math to lose 20 to 30% of the time. And you don't know which trade is going to win and you don't know which trade is going to lose, but you will know without question that when your rules are met, you have described a pattern that can be proven to win more than it loses. And I'm going to be honest with you guys. You're going to start saying things that sound arrogant and cocky. You're like, they're going to have to come get me. I'm not going to offer myself up at areas inside of triggers. I'm not going to get stopped out in the retracement zone. They're going to have to get through everything good if they want my money. And you literally will not care if that high probability trend trade wins or loses, because you know every 10 you take, you're going to lose 2 or 3. You just don't know which 2 or 3. That's where consistency comes into play, guys. That's where focusing on the process, not the result, pays huge dividends for new users, because momentum is always momentum. It's always separation. A clear path is always a clear path, guys. It's always triggers above trouble, haven't reached the next area. And when your large chart says giddy up, when your large chart says Victor, look for an entry, when your large chart says Shane, man, it's time, here we go, you're already in an absolute frenzy because you feel like the market's going without you. And you're like, how am I going to make money if it keeps going up? And then the small crowd shows up, guys. Then the small crowd shows up, and the small crowd says, hey, check it out. Here we come. And you're going to say, well, that's awesome. I know exactly where you're most likely to go, right to areas inside of triggers. And the new user, I'm going to tell you right now, guys, I've been doing this a long time. And for those of you who don't know, there was a point where I was a new user. The new user is going to say, man, but there's a termination condition in the way. And with a little bit of study, you're going to remember that termination conditions are defined on the large chart. And this 1-to-1 is exactly what we need to create a bounce to get us back to that area. And you may also say, man, my triggers turned against me and that doesn't look like momentum anymore. And then you're going to have to remember through study, through feedback, through simulation, that momentum is defined on the large chart. And if there weren't just a little loss of momentum, we'd probably never get back to that area inside of triggers. And guys, if you put a circle around a tail on the large chart when the rules are met, I'm teaching you how to study without ever having to take a trade, and that circle lines up with the area inside of triggers on a small chart, that's your entry. That's a potential trade. And it'll be up to you to decide whether or not you have the advantages you need to enter. So let's go back and see if we can find one of those tails with the rules met. Here's one right here, right after the heat of news, guys. And before we ever look at the small chart, I want to ask you guys, do you see the momentum? Small's below the large, space between the two, guys. This is rule number 1. And without that look, there it is in a live market. Without that look, there's no reason to even look for rule number 2. Price has not reached a divergence low. There's nothing I'm trying to break. Guys, I have momentum and a path. That's the best of the best. If I scroll back an hour on this chart, whoops, wow, there it is right there too. That was in the middle of news. We'll go look at that one too. Where is that circle? Man, news was crazy, wasn't it? Where is that circle? Oh my goodness. There's my reversal bar. There's my pullback to areas inside of triggers. There's the market not going where the market shouldn't go. And there it is, pushing down all the way to that area that could stop the market. Do you guys see it? This is your pattern. It is your job to learn this pattern, because when you learn this pattern, when you recognize momentum, when you have a clear path, and guys, this is during the middle of absolute news psychosis. It still pulls back, but not to an area inside of triggers. But guess what? They came back for you right there. And here it is again, in the middle of news, guys, when the market is too fast to trade, when the market is untradeable, unreadable, too much crazy, there's that pattern again. Momentum and path right to a mid-band inside of triggers. Guys, this is 3 examples from this morning in the last hour and a half. Your job, should you choose to accept it, is to learn that pattern. And if you go to the rules, if you go to the spreadsheet, guys, and you look at these client trades, this particular trade, I don't even know which one it is. Look at that. It's momentum. It's the potential to break. It's a pullback to an area inside of triggers. And this trade is from 2021, guys. This is a pattern from 2021 that you can prove wins more than it loses. So I encourage each and every person in this room, before you look for the money, focus on the process. And before you turn into the trade police, remember that you are going to grow, that you are going to read charts better, faster, more accurately. And I'm here to help you do that, guys. So when you look at your charts and you say, I have momentum and my path is clear and my entry area is clearly defined, I want you to believe that you have a high probability trend trade and you have a higher chance of success than failure. You should never hesitate, ever. Now, if you notice that one of your advantages are gone, but the other 2 remain, you can say to yourself, well, this is a medium probability trade. I've got an issue. And this will be the majority of your trades, guys. You're going to grow outside a high probability trend trade. The more focus you put on understanding this, the quicker you get to medium probability trade. And all a medium probability trade is says, hey, I may have to manage this one a little bit. And if you notice that 2/3 of your advantages are gone, guys, I give you permission to do nothing. Give yourself permission to do nothing. You're in control of the entry. No one can make you enter the market. No one can make you do anything. Knowing what's working for you and against you helps you make decisions not only on entering a trade, but also how aggressively you may need to manage it. And guys, if you don't know how you're going to manage a trade when you get in, you are going to have a fit trying to manage that trade. So speak in terms of advantages. Are there any questions about the high probability trend trade, guys? Any questions about the path to get to where it is you want to be? Take pictures, post them in the room, guys. All right, so now we're going to go to TradingView. This is the other one. You can make an amazing living with trend trade. Victor said, hell, I can make a living with trend trades. A good living. Absolutely. Guys, the most successful traders that I've ever worked with in my life have the fewest moving parts in their trading plan, have the biggest focus on advantages, and their trades are boring. Their trading life is boring. They do the same thing every day. And guys, that's how you get to where you want to be. So Ninja users, turn your brain off unless you're going to become a TradingView user. TradingView user is going to see a lot of the same indicators, guys. You're going to see divergence, highs and lows, one-to-ones, mid-bands, trigger lines, all that good stuff is very familiar. The difference is TradingView doesn't have Fibonacci yet. We've got programmers working on it, but they're not there yet. So there's a company called Chart Prime, and I'm not trying to push a purchase on you guys. They create these areas of supply and demand that are absolutely amazing. I use them personally. It's $50 a month. If you don't want to put that investment in, if you're trying to evaluate the software, guys, there's a free version. I'll share it with you. It's called Algo Alpha, and it's still pretty darn accurate. We do have users that use it. I don't advocate or promote anything outside of Nexgen, but there are options. So don't let the idea that someone tells you you need sharp prime bum you out. There is, let me go to my indicators. I saved it for you guys. I'll give you the picture. Supply and demand zones right there. That's the free version. I don't think it's as good, but it's a pretty reasonable facsimile. Andy says, Mark, I'm driving when you were speaking about TV and the need to close out all positions before changing what you're looking at or before you shut down. I don't remember who I was talking to, but you learned to check the tab positions, and if there's no open positions, you're safe. Yeah. Always make sure you're not in a position, guys, if you're not supposed to be. If you're leaving the computer, make sure there's not a hanging order somewhere. So guys, the indicators are 90% the same, but the bar structure is very different. I think TradingView offers a little patience that I need in my own life. I tend to be a little jumpy. The large chart is a 15-minute chart, and I can't stress how much can happen in 15 minutes, guys. In a fraction of a minute during news, we saw a 180-point spike, and it was one bar that it happened on, guys. 15 minutes will define direction, momentum, targets, and areas, terminations. But it is a slow glacier of a chart. Your entry chart is a 1-minute chart. It's a much faster chart, but guys, 1 minute is still a long time. It feels like it takes forever, but it slows things down, and it'll show you the immediate momentum in the market. It'll show you those strong triggers. And this is how we define entry points. And again, large crowd wins. 15-minute chart leads the way. Momentum, direction, and path, guys. Momentum, direction, and path. Everything you do is momentum and path, momentum and path, momentum and path. Small chart, defining entries. It's an entry chart. It's the siren song. And these yahoos will try to suck you into trades that the large crowd isn't in support of. So make sure large chart rules are met, which means you've got to learn how to read your large chart. And I had a great lesson with a buddy of mine yesterday on this. First, we'll define direction. And we'll define direction with the small triggers. In the plan that I give you, there are workspaces for NASDAQ and the S&P. And if you're a gold trader or a silver trader or a feeder cattle trader, guys, you can take these and just change the symbol. But the workspaces that I give you in the KISS plan, the simple plan, the focus on the best plan, it removes large triggers from your 15-minute. It's just too slow. It also removes the background color, because background color will make new users force an opinion, guys. So your small triggers are either up or they're down. And let it be clear, if you can't define whether your triggers are up or down, if you look at your triggers and they're flat as a pancake, guys, if the large crowd can't decide where they're going, don't try to make that decision for them. Let it be very, very focused. And you do it, again, on the most current bar. And on the most current bar, when the triggers are up, your direction is defined. Excuse me. And you know that you're only looking for rules to be met as a brand new user to go long. Guys, when you grow a little bit, there's other opportunities in the market, but right now we're keeping you focused on the highest chance of success. Once the trigger lines say up, you're going to ask yourself, where is the most current price in relationship to those triggers? And this is a little blown up look of what's happening right here. There are 3 places the most current price, the highlighted price, can be. The first one is to the left of the triggers. The second one is to the right of the triggers. And the third one is inside of the triggers. So guys, if you're comfortable with left, right, and inside, you have everything that you need to define momentum. Because if you're left of the triggers, guys, left of those small triggers, and let me give you a little trick for you guys that don't see things super visual. You can take an arrow if you want and extend your small triggers out into the wild blue yonder. And it makes it a little easier for some people to see left. Whoops, that's not what I wanted to use. To see left to see right, to see center. Um, so what you're going to do is you're going to ask yourself, where's the price? And this is going to define the momentum. And by defining the momentum, you will know exactly how you're going to manage that trade before you ever enter, which means that you don't have to think about management in the heat of the battle. You already know what you're going to do, guys. And if you're left to the small triggers, this is the strong side. This is the best of the best. This is the highest probability. This is odds favorable momentum. This is the look that I get giddy about. It is the strong side. I'm looking for long trades, and my 1 minute areas are most likely to break. This is the look where I tend to hold for bigger moves. Now, if I am right of the triggers, I'm on the weak side of the triggers. And it doesn't mean it's up, but it's the weak side. It is up, it is the weak side. Don't let that word weakness keep you from taking a trade. But that word weak tells you that you may need to get paid at the first sign of trouble. That 1 minute areas are more likely to stop the market. So your management plan is in place. And if you've got room to a target from the weak side, let it get to that target. And then when it's not strong or weak, that's transition, guys. This is the middle of the road vanilla. This is like, okay, it is up. There's some push. But if I see a 1 minute area, I might take a partial. I might take one contract off. I might get to break even. I'm going to identify trouble every time, and I'm going to know how I'm going to react to it based on where price is in relationship to those triggers. Does that make sense, TradingView users? Best of the best. Pretty good. Not the highest probability, but still looking for long trades. And because this is so slow, don't let weak talk you out of the perfect trade, guys. Don't let weak talk you out of it. Just be prepared to manage it. But the weak side is exactly where you reside when reversals happen. So be aware. And then finally, the most important question, guys, and you should ask this every time, do I have room to targets? On my big chart, is there room for my potential entry to get to trouble? And if there's not, there's no reason to look for an entry. If you don't have room to targets, guys, why on earth are you trying to take a trade, right? If there's no room to make money, it is your right to not enter a trade. But if that answer is yes, you have defined direction, you have established your momentum, and you have said, I've got room to get paid. It's time to go look for an entry, guys. We're done with the large chart, and now we're going to go to the small chart. And the first trade that I'm going to introduce you to is what we call a trend trade. And a trend trade will be about 90% of your trades, guys. I love the trend trade. There's no stress in the trend trade because a minute bar takes a minute bar. Yeah, Victor's making a killing on trend trades, guys. It starts with rule number 1 of only 3 rules. The 15-minute chart is not trading directly into areas, assuring ourselves that we have room to targets. And then rule number 2 says, don't trade right into areas on the 1 minute chart. Guys, room to targets. In this room, the most common loser ever presented, whether it is NinjaTrader or TradingView, is you guys hoping stuff breaks. You don't have to. You're better than that. If rules 1 and 2 are met, I'll turn my attention to my entry, guys. And on the small chart, I'm going to buy or sell a pullback at an area. That should sound familiar, but my pullback to the area, in order to initiate the trend trade, when the small triggers are up, when I'm in transition, when there is room to target, the moment, the second, the instant, my small triggers on my smaller, faster chart point down, I have to look lower. I have to look deeper. I have to say, okay, I've lost my immediate momentum. Where are my areas down below? And guys, there it is right there. There's your yellow 1-to-1s, and the market pulls right back to them. They know about these areas. They love these areas because they create these areas. Your entry is an up bar, a bar that's going up, not a down bar, but a bar that finishes as an up bar with a close on the weak side of the small triggers, on the correct side of the small triggers. This look right here is your best of the best entry because you're on the weak side, and the weak side is where reversals happen, and that's where the market is most likely to continue with all of the large chart advantages. If there is no area, your rules aren't met. It's a pullback to an area, to a midband, to yellow one-to-ones, to a zone. Guys, these little fluctuations before an area is reached are very often head fakes, and they very often push lower to get to that area. In a downtrend, when the triggers are down, you're on the strong side, there's room to treble. The moment those small triggers roll, your job is to wait for the pullback to the area. And there it is right there, right to a midband, right to a zone. But your entry is the down bar that closes on the weak side of the triggers, because that's where your highest chance of success comes from, to take that trend trade, to go down with momentum, to go down with path. And guys, these trend trade entries, you might wait for them for 10 minutes, 15 minutes. You might circle areas and say, this is where it has to go. And 10 minutes later, you're finally in that trade, guys. And these trend trades create a lot of patience. The other trade is a momentum trade. And it's exactly what it sounds like, guys. It relies on momentum. I think that the second biggest mistake that I see from Nexgen users is saying, hey, Mark, look at my momentum trade, when there's absolutely no momentum on the chart, when there aren't strong triggers, when they're not on the strong side, guys. So when we go through the rules, it starts with nothing in the way on the large chart. That's the only reason to go to the small chart. Rule number 2 says, and it's doing double duty. The 15 is on the strong side, and the 1 minute has odds favorable momentum. Strong trigger looks, guys, because that's the momentum that we're going to rely on to push in the direction of the trend. And when you have these first 2 rules met, you can come to your smaller, faster refinement chart. And the momentum trade entry, guys, it's the only entry that uses a limit order. It's the only time that I wait for the market in an area. And before I ever enter a momentum trade, the market has to break the area, because remember, when resistance is broken, it behaves as support. I want to see it break, price get away, and as it pulls back to that zone, to that HVA line, to those one-to-ones, I'm going to enter with a limit order. And I'm going to hope that with the strong side of the triggers, with odds favorable momentum, that the market continues up. Momentum trades are about 10% of your trades, guys. And the most broken rule in momentum trades is that people try to take them without momentum. So strong side, odds favorable, very low risk. And the cool thing is that if your momentum trade fails, if they come and stop you out, it very often, because of the large chart, just turns into a trend trade. Don't sweat it. So from the strong side, with nothing in the way, let it break, let it pull back. Your entry would be about right here, guys. And your stop would be just above that zone. And all you're doing is you're saying, man, I sure hope momentum pushes the market down. I sure hope momentum carries it lower. And if it doesn't, well, then I'll just look for a trend trade. It's about 10% of your trades, guys. And that's trading view. And look at it right now. The triggers are up. I'm on the weak side of the triggers, and I have room to targets. Does everybody see that large chart read? 1 minute has absolutely no room. Therefore, I'm just sitting on my hands. So guys, that's my first hour. It's the same hour every day. It's the same rules every day. It's the same repetition every day. It is the exact same looks, the exact same rules. The market repeats itself. Your job is to learn those patterns. When I come back, I'm going to click on every chart that's been posted in the room, guys, and we're going to do the feedback process. And when I do the feedback process, if you want the best of me, you have to give me the best of you. You have to annotate and tell me what you saw in regards to momentum path and entry, and give me the opportunity to make sure that you're reading things correctly, that you had the best entry, that everything makes sense. If it doesn't, we'll talk about it, ways to fix it. If it does, we'll high five. That picture goes in your plan. I really hope for the same courtesy from my TradingView users, guys. If you're not telling me what you see, I can't help you see it better. So describe your direction, your momentum, and your path, and show me where you entered and why, guys. And if you do that for me, it's like having a private session, and we will talk about the good, the bad. We will talk about the fixes, And you now have, let's do this picture, everything you need to be successful with the software. You have rules, you have nonstop feedback, you have a plan. Now it's up to you to do the work, guys. And the people that put the work in typically get to where they want to be. The people that believe that the purchase of the software makes them a master trader, they struggle, they get frustrated, and they swear at me in private emails. So take your pictures, annotate your charts, present in the room, fill out your spreadsheet, guys, and it becomes endless. You now have the golden goose. Don't turn it into fried chicken. I will be back in 5 minutes. When I come back, guys, we will have an awesome rest of the day. Post, ask questions. I'll see you in 5. right, guys, here we go, round two. I'm going to scroll up to the very top of the room and I'm going to click on the charts that were presented. There's not a ton of them, but there's a few. It's nice when there's actually news, makes the market bounce a little bit. Bum, 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 ba-dum, bum, bum. Almost there. I like to click on all of them, guys, and I'll go through them one by one and I'll talk about advantages. Do me a favor. Don't get your feelings hurt if I miss one of your trades, if I miss one of your questions. There's a lot going on. And sometimes that happens. Just do me a favor, repost it. Go, hey, Mark, I think you missed this one. I could really use a little feedback. Stop being a jerk face, and I'll take care of you, no worries. Joel gets us going today, and I like this. Joel's like, man, I got all the momentum, Mark, and it didn't quite reach that fib, and it may have. Came close. He enters at the area inside of triggers. Stop keeps him safe. He gets paid at trouble. Manages out of the position when Fibonacci resistance holds. Great job. And guys, this is where I would say, if you're brand new with me, I'd be like, all right, you were pretty close there. Maybe took a shot. Maybe took a shot that isn't your highest probability shot. But with that momentum and with a well-defined area, it opens the door for management. And guys, getting paid at trouble is a wonderful thing to do. Getting paid at trouble gives you the ability, because you really will. You'll know where the market is likely to go. You will understand where the market is likely to stop. And if you're in a position, Fibonacci resistance is an awesome spot to get paid. If you're multiple contracts, and then exactly what Joel did, Joel said, well, you know what? Areas break when there's momentum present. Maybe I'll hold that second one. Sorry, guys, my Ninja Trader crashed. Joel says, I'll hold that second one. But if I get an indication that it's not breaking, I'll be at break even. No harm, no foul. Take and manage. Nicely done, Joel. Good looking trade. And that's just the pattern. And then this is definitely Pete. When the market's going up, when he's on the strong side of the market, and Pete says, I sure hope it goes up when it gets above the area. and it works out beautifully, guys. It works out beautifully. And one of the things that you're going to notice is that these areas can stop a market, guys. And letting it break and pull back creates a huge advantage on these 1 minute charts. Letting price physically get above and then pull back rather than just peaking heads, because the head was peaking there and the momentum was better. And it was peaking there and the momentum was better. And then it starts to react and then it goes sideways and we're losing momentum. And letting it clear creates a definitive advantage. And Pete, you take this trade better than anybody. Nicely done. And then I love this recognition. Not a clear path. And the triggers are getting weak. And guys, one of the things that you'll notice is that these divergences are a loss of momentum. And very often that loss of momentum is the small crowd telling you, hey, we're going to fight. We're going to fight. We're still fighting. We're hell-bent on fighting. And you won't see that change on a large chart. So it's honestly your small chart telling you, here we go. And then Pete says, I know this look, and it's right by a fib, and I don't have a clear path. And look at how a small chart creates that momentum look. And Pete says, oh, they're going to push lower. That's the look. And he rides that momentum down, and I love that trade, Pete. When the market can't go up anymore, when the market's telling you we're not going up anymore, you see that change on a small chart, and that is just a perfect example of capitalizing. Nicely done again, Pete. And then momentum, 2 triggers through, and Pete says, I'm going to try to get that momentum. I hope they run. And they didn't. But remember when I said that when that momentum trade typically fails, it turns into a trend trade if it's a good look? And that's exactly what it did. And then right there, that divergence low, what a great spot to take some profits, Pete, because it's only 2 triggers through. It's from a weak top. This is the small chart telling you we're probably not going to break. And I love that they came back and let you cover commissions. But these are the trades where I'm hyper aggressive right here and making sure the majority of my profits are coming out at trouble. especially when my smalls start breaking above the large, when my large start trying to turn. It's a great visual that it's okay to collect a little cash there, and then you can have your one runner. You can do whatever you want, but partial payments are pretty cool. All right, over to trading view. The small trend trade triggers are up. Price is on the strong side. There's space to trouble. Small chart triggers rolled, so Victor looks lower. I love this. Market comes, closes above. You chose not to take it. And then you get in over here, in at 78, out at 80, out at 80. And Victor, I'm not sure where you were. Opportunity to get in, to get a better price, and give yourself a little more room. And where you got in, you had all of $60 profit potential. And it's awesome that you got paid. But there's going to be a point, guys, where you say to yourself, I don't like the risk for only $60. I don't like putting $300 of risk on a trade that doesn't have anywhere to go. And that's exactly what happened. Is it didn't have anywhere to go, and way to capitalize, way to not lose money on that very tight trade. Um, One of the things, and we can talk about this, Victor, I'm not trying to change your plan, but I want to make sure that you see that that was the entry, right? And it was pre-market and pre-news, and they did spike lower. But once your entry is given, guys, and once your stop placement is defined, if you don't take it, your stop is already where it needs to be, right, Victor? Below a low pivot, probably off of this bar. Is there any reason you can't get in for a better price using that stop? And that's one of the things that I think you can do is you could find yourself in this trade closer to 75, or maybe when the triggers roll, finding a way, and because you've already got a stop in place, you've already got a low pivot, and now it's just heading the direction and your small triggers are rolling. And once that happens, do you really need to wait for a close on the correct side when you've already had it? And this is something that I'm looking at, those second chance, those later entries. So when you see them, maybe study them. And when you study them, see what you come up with. And if you need help, let me know. I was watching this one, Pete, as it set up. I was literally typing an email and I was like, oh, Pete's in this trade. True story. All the momentum, guys. Two triggers through. And he takes the pullback right to the area inside of triggers. Awesome quick profits, great management. And I want you to see something that's really amazing on this trade. This is one of those 50-50 trades. This is one of those potential to break trades. Let me go grab my multitude of pictures here. And one of the things, that Pete is really in tune with, guys, and one of the things that you'll become really in tune with is that if a trade is momentum, path, and entry, and Pete has to say that my path is gone and it's only potential, new users will say, damn it, I don't have a trade. New users will say, I just can't get my rules met. Pete says, I've still got 66% of the goodness, right? I've got all the momentum. I've got a beautifully defined area. I'm going to lean on these two advantages because that one's not present. And 2 out of 3 is a medium probability scenario. Be ready to manage. But I want to go even deeper. If Pete is leaning on momentum and he's leaning on that beautiful entry, notice that Pete's small chart has that strong trigger look. That's momentum. And it's just acknowledging and confirming the large sharp momentum. And Pete does not have any divergence, no losses of momentum whatsoever. So he never gives up that first advantage, whether it's large chart or small chart. And with the beautiful entry, it's awesome. And you'll notice that he's not holding for home runs because it's only a medium probability trade. And guys, this is where all of you are headed. If you're brand new with me, I realize fully that it aggravates people to say, well, the high probability trend trade only happens 3 or 4 times a day on this market. Why would I want to only trade that? You're not. You're taking your ability to recognize these advantages and opening the door for more, guys. These are the magic beans. And it sprouts into the stalk that takes you to the golden goose. And how's that for a little fairy tale work? All right, the pirate trade. Termination condition stops the market, 100%. And there's the same termination condition that stops the market. And the small triggers roll and the large triggers are still up. And while this isn't odds favorable momentum, this is a very significant change coming from an area that says absolutely no more shorts. The small chart does have odds favorable momentum. And Ron says, you know what? From a termination with the small triggers up with odds favorable momentum, I'm going to take a quick little snippet. I'm going to take a quick grab based solely on momentum. I'm going to make a little over $100, 100 in my pocket, a little something for the broker, and I'm going to GTFO. I'm not going to care what happens next because base hits pay bills, guys. It takes $400 a day consistently through a trading year to create a six-figure income. Your account doesn't know if you grab it $100 at a time with the absolute best of the best. And for you math gurus, 100 times 4 is a six-figure income every year based on the highest probability, best of the best, momentum and path, guys. That core concept. Really nicely done, Ron. All right, 15 minutes up. Transition side, I would even say it might be the weak side there. Clear path. Market pulls back. There's your close above. There's your entry. There's first profits. Just absolutely gorgeous. And I love the way you did this. This is you, right, Paul? So, guys, I want you to check something out here. And I think this is where the amazing idea, the moment you identify this, and Paul, I think from your entry, it was the weak side, right? So you put transition. It was transition on the way back, but it was weak on the entry. The second Paul saw weak, and I'm going to be Paul for a second, and Paul says from the weak side, 1 minute areas are more likely to hold, right? And I want you to see what he did. Paul said, if trouble on the 1 minute is more likely to hold, I'm going to take my great entry and I'm going to GTFO right at trouble. And I don't care what happens next because my large chart dictated my management. And guys, some of you will grumble about a $470 trade. And if you ever find yourself angry that you only made $470 on a trade, I want you to call everyone you know and tell them that you are an amazing trader, because when that pisses you off, it means that you know there's so much opportunity in the market. But you don't have to catch it all in one swoop. Paul, this is the perfect trade and the perfect management based on the large chart read. Guys, that's everything I teach every day. All right. Victor says, if Paul can do it, so can I. Trend trade, read my analysis mark, waited patiently for my look, triggers up, price on the weak side, which means I must manage aggressively on the small chart. Clear skies. Small chart, triggers rolled, price closes on correct side of the triggers. That sounds familiar. Set profit targets, hit first profit target. Trouble area, got out, mismanaged. I had momentum, I could have waited to get out. Lost the opportunity to another 340. Trade ended up 745. And then, ladies and gentlemen, Exhibit A. When you're pissed off that you only made 745, congratulations, you're doing things right. Victor, you managed it the way your large chart told you to manage it. And there has to be a willingness. There has to be a willingness to follow your management plan instead of your gut. Because guys, the second you believe the market stole 340 from you, and I'm going to show you what happens. And let me know if this has ever happened to you. The moment you believe your large chart stole your 340, the market took your 340, you say, well, I remember last time, F those guys, I'm going to hold. And do you know what happens, Victor? More often than not, from the weak-sided triggers, they will spike like they're getting paid to spike. And they will take all of your profits. And guys, that's where consistency is really just one of the greatest advantages that you guys have with this amazing plan. You know the highest probability chance of success management plan before you ever pull the trigger. And Victor, you did a great job on it. And I'm going to encourage you guys. And I'm gonna tell you through my own experience and my experience working people. When you start using phrases like I missed, left on the table, didn't get, right? All of these things create an emotional response where your brain says, we'll get those guys next time. We'll hold next time. We will break our management rules next time so we don't hurt, right? And guys, your brain will say, I know that area is more likely to hold, but look, Victor, it broke this one time. Break your rules next time, Victor. Hold that trade next time. Ignore everything next time. Because what if? What if it goes up? And guys, I'm telling you right now, consistency and execution is what will set you apart from the people struggling to find success. And great entries create very manageable trades. I love everything about this one. Guys, look at that. The perfect trade coming from Arizona. The exact same trade coming from Georgia. Two different gentlemen in two different parts of America taking the exact same trade because the rules are met. And Victor, I'm not beating you up. I'm just lessons for the crew, guys. Lessons for the crew. Triggers down, transition, room to trouble, trading into all the trouble, right? There's your entry. There's just nowhere to go. So you let it peek its head, almost. But following the large chart, getting paid at trouble, nice job. Had to wait too long. 10 minutes is a long time. That's another one of the cool things that happens, guys. When it's the right trade, a lot of times it just spikes. And you guys will feel like 2 to 3 minutes is an eternity. And during that 2 to 3 minutes, you may question, should I really be in this trade? Why isn't it going? What's it doing? And I want you guys to see something. And Andy, you probably saw this in the moment. From the point of entry, what changed, right? Nothing. The small triggers continued down. They never closed on the weak side of those triggers. The large triggers started to roll. Andy never lost one of the good things that was the reason why he got in. And because of that, Andy, you had the patience to wait for it to get to trouble. Really nice trade. Just another trend trade. Triggers up, some room to the outer band, pull back to the area, enter on the close on the correct side, get paid again. The exact same trade going the other direction, guys. We've seen it in gold. We've seen winners on crude. We've seen you guys trade in the S&P. We've watched you guys trade the NASDAQ. And the one thing that seems to be the common thread is that all of you guys know not to fight those small triggers. All of you guys appear to know to let the large chart lead the way. And if you're not at that point yet, there's hope for you because you will. Build that trust through study. Weak side of the triggers, but it's up and there's room. And Miss Claire says, I don't have to jump in. You know what I'll do? I'll wait for a close above the triggers. And it looks like you even got in a little late, Claire. You could have been in right here. But you're like, you know what? Let's make sure. So there's your entry. Where's your entry? Here's your entry, 91. It's a little late, Claire. Do you see it? Could have been in all the way down here. Stop is already in place. Just more money. But nothing wrong with this one. Everything just keeps getting better. And I love the bullseye. $1,500. Claire, There's always one person in my room that is my big move holder. And you do such a great job of letting the large chart lead the way that you're comfortable. You're comfortable in the areas when your stop is established. And guys, if you took this trade from the weak side and exited right at trouble, Claire, there's nothing wrong with that. Nothing at all. You just caught it on the second run. And what this really is, with the triggers rolling, is a momentum trade right off of the HVA. And it's beautiful. Such a nice job. And it's funny, guys. I'm like that proud papa. I really am. Triggers up, weak side, pulls back. There's your entry. Claire says, let's go make some money. 15-minute in transition. I'm not going to hold for a home run. I'm only going to take $1,200 this trade. And guys, that's a 2-lot. That's a 2-lot. And Claire, unless you're hiding a lot of losers, you are absolutely taking giant chunks out of this market. And you're doing it with nothing but trend trades. And there's this part of me that's so excited that you guys are doing that you guys are seeing that you guys are saying, I don't have to be in every move. My money's worth the best move. I have the highest chance of success from the best moves. Market reverses out of nowhere. Mid-band holds, closes the gap to the large triggers, and then begins back up. And Pete says, I like that look. And then it gives them momentum. And that was a fib update, Pete, so that wasn't even there. And you just missed, was going to wait for another pullback to the mid-band, but you entered anyway and take it up. And the only thing, and I know that Pete knows this, but for you guys that are brand new, these fibs weren't there yet. That's a fib update that happened. So there was momentum. There was 3 triggers through. There was the perfect pullback to the area inside of triggers. And then there was continuation. And one of the things, because Pete is good at what he's doing, Pete's reading those indicators. Pete has what we call expectations. And I think that expectations do play a role. It's not that the market will make it to Fibonacci resistance with this look. It's that Pete knows that the perfect trend trade is more likely to make it to that area because of the momentum, because of the path. And Pete says, even if I enter right here beyond the greatest, I've got a place for my stop and I've got room. I've got room to make money. And all he did is he jumped in the middle of a trend trade because he understands the expectations of a trend trade. Does that make sense, everybody? When I tell you every morning that you will understand beyond a shadow of a doubt where the market is most likely to go, where the market is most likely to stop, right? And even so, where the market is most likely to continue. And you're going to be able to use these concepts and move forward and find more every day. So good stuff. All right, guys, that's all the pictures. This is where I open the door for you guys to start asking a million questions. As soon as the colors on your trigger lines don't match, you no longer have strong triggers. Does that make sense, everybody? If the colors don't match, if the background, the triggers, the small triggers, the large triggers, if they're not all the same color, rule number 1's not met. They were. There was your trend trade, guys, right there. Right there. And that's what we're going to do. We're going to go live chart trading. This was, with momentum and path, the perfect entry. And guys, great entries create manageable trades. Great entries reduce risk. Great entries give the opportunity to capitalize even on trades that fail. And the second step for you guys, once you learn these great entries, is to begin to learn how to manage them. So in the beginning, on the KISS plan, there's a very clear if-then defined management plan that revolves 100% about your understanding of good entries, guys. And I'll show it to you. And just if you want to go study it on the weekend, it's right here in the management section of the client trades. And remember, management is where fortunes are won and lost, guys. So I want to go through the KISS plan management real quick. I know I've got some new people in here. And you're eventually going to learn what to do with your great entries. But until you can read indicators fast enough, this is a plan that's based on 2 contracts, and it's designed to teach you to put your stops where the market shouldn't go. And even more importantly, it's designed to having you accept payment, to letting you get paid, to putting profits in, to not always holding for home runs. There's plenty of time to figure out how to get home runs, guys. So the first step in your management plan is to take your entry where the market is most likely to continue. And all it is if then. If entry is 2 ticks below resistance inside of triggers, that's a familiar phrase, then the initial stop is 4 to 5 ticks beyond those triggers. That's where the market should not go. If this is going to be a part of that 70 to 80%, that's where the market should not go. You'll know your risk before you ever enter a trade, guys. You'll know exactly where your stop goes before that order is ever filled. You have to be okay with risk. And we talk about risk a lot, guys. And this is $150 per contract. Some of you will say $300 is too much. That's too much risk. Anybody ever say that when they're looking at a trade? $300 is too much risk. Guys, is $300 really too much risk on a pattern that you can prove wins more than it loses? Is $300 really too much risk on a trade that brings more success than failure? Your risk is a number, but your risk is where the market should not go in a very definable pattern, guys, and you have to learn to accept risk. Because if you put your risk, your stop, at an area inside of triggers, it's likely to get hit, only to watch the market go without you. Even if you keep it in the retracement zone, thinking you're going to pull one over on the small crowd, it's still likely to get hit, only to watch the market continue. So learn to accept risk, guys. Risky, and I'm going to tell you right now, and I'm going to show the picture. For new users, risk is a number. For you guys that believe in the methodology, risk is what happens when you give up advantages. Risk is what happens when you fight the trend. Risk is what happens when you trade in determination conditions, because you're more likely to lose than win. But when everything is perfect, the risk is acceptable, guys. Your stops are predefined, $100 and $200. And if they don't stop you out, and they will 20 to 30% of the time, if they don't stop you out, it means you got a reversal bar. You'll also hear it described as a confirmation bar. And why is it a confirmation bar? Well, it's confirming that the market is going down with the large chart trend, that the market is now going down with the large chart momentum, that the market has started down with that clear path, and it's done it right from the area where it was most likely to do it, guys. It's confirming that life has just gotten good for you. And your new stop will go 2 ticks above that reversal bar. That's where we're going to define where the market shouldn't go, because the small crowd has already tried and failed. 2 ticks above, guys. Doesn't guarantee a win, but what it does is it takes that $150 per contract risk and it drops it down to $30 a contract. And I'm going to tell you guys right now, I have seen Nexgen users sell the high tick, have $20 of risk on a trade per contract when it begins to head the direction. And now there's nothing to do. Hands are up, and you're saying to yourself, it's up to the market now. They're either going to hit my first contract or they're going to stop me out for 60 bucks. And the same way you guys grumble about only making 400 or 500, 60 bucks isn't going to phase you, not a bit, guys. Great entries create very manageable trades. If they don't stop you out, well, then the heavens open up and the angels sing, and you just got paid, guys. If price reaches your first target, one contract is automatically removed. Those funds go into your account, and with one contract remaining, you're going to move your stop to break even, and you're going to say, you know what? I absolve myself of risk. The large chart is screaming down. There's nothing in the way. I've already been paid. They're either going to hit my next target or they're going to stop me out break even. Now, I think it's important to notice that I didn't say where the market shouldn't go. Guys, this is the brand new user's best of the best, because your stop is just below a mid band inside of triggers, and there's no reason they can't come back and get you again So if you make $100 and you're break even and they come back, get back in, right? And you'll get to the point to where you have that reflex, but there's no risk. There's nothing in the way. You've already been paid. And if they go to your second target that's only $200 away from your perfect entry, that's a $300 trade, guys. And a $300 trade happened in a couple minutes. And it happened from the best spot. And it was riddled with advantages, guys. And a $300 trade, if that's the best you did every day, if you shut it down at $300 every day and you did it consistently for a year, that's a $75,000 year. Guys, your yearly profits are dependent on daily consistency. Your daily consistency will be dependent on your ability to follow a plan that makes you consistent. And what you'll find is most new users, I won't say all because there's a few of you, Ron C, that are magically disciplined. Most of you are going to chase this number. And you would rather have a losing day than not hitting that number, even though you're not sure how to hit it. Some of you can hit this number effortlessly, but you have absolutely no ability to shut it off when you hit it. So you keep trading until that number is either 1,000 or 0. And guys, my record, and I'm going to share it with you, my record on an account that needed $3,000 to qualify it with a prop firm, I was at $29.95 going into the day. All I had to do was take one trade for $5, one high probability trade. I ended the day, hold on, 0 is not accurate. I ended the day at about negative 2,500 and blew the account out because I got arrogant. I didn't have a stop loss in place. I didn't remind myself that I don't have to make it all at once, that I don't have to be a badass every day in my life. I just got to make it consistently. So consistency pays dividends, guys. And if you're doing the same thing every trade, you're going to know exactly how to enter it. You're going to know exactly how to exit it. You're going to know exactly everything about what you're going to do before you ever do it. And that is one of the most freeing feelings you will ever have as a day trader. You've done that 3 times in the past few months, never again. I like it, Gino. But Gino, you have to, right? I mean, you don't have to. The majority of traders will have challenges. The majority of traders will make bad decisions. The majority of traders will succumb to emotion, guys. And it's part of being human. And God bless you. I love you all as humans. But you've got to learn from those mistakes. And if you don't know that you're making them, if you don't know that you're making them, guys, how are you going to fix them? That's where participation in the room really does pay dividends. If you don't know what you're doing wrong, how can you fix what you're doing wrong? I like to tell stories on Friday, so I'm going to tell one. Gino, you'll love this. That's it. Until you make them yourself, you're not there. So my golf game fell apart, and I don't mean I had a great golf game and it got marginal. I had a marginal golf game, and it got just catastrophic failure. And what I realized, and this is very real parallel to trading, guys, is I was getting lucky. I hired a coach. Gino, you'll be proud of me. I hired a coach. I hired a collegiate player that has been teaching for 20 years. And I said, hey, can you help me? And I honest to goodness, I thought he'd say, oh, it's just this one thing. You're good to go, right? And what happened is my swing was so bad, but my strength is so great that I was getting lucky. And my swing didn't resemble a golf swing, guys, but rather it was brute force getting me into the 90s, low 90s, sometimes an 80. And he said, okay, you're getting lucky. And guys, this is like getting lucky on simulator. It's like going short against strong triggers, making money and deciding that you're an absolute badass. And he broke my swing down. And he said, okay, I want you to try to forget everything you know because it's not serving you well. And golf was no fun and I was ready to quit. I'm not going to lie. He said, I'm going to give you the mechanics that produce a great swing. And he started with my grip. We'll call that momentum. And then he taught me how to pull the club back. and we'll say that that's the idea of a clear path. And he said, now this is how you shallow the club to make good contact. And he took one swing and he broke it down into three parts, and it was actually like seven parts. But and when I learned the backswing, then he took me to the next thing. And when I learned the beginning of the downswing, he added the other stuff. And man, I'm still not there, but I'm better than I was, guys. And one of the things that my ego didn't let me do for so many years was hire a coach. I'll figure it out myself. I'll do it myself. I'll watch YouTube. I'll never practice, but I believe I can be a great golfer because I just bought new clubs. And it was awesome, and it changed my life. And golf is fun again, even though I'm not playing that well, because it's like that one winning trade. You're like, oh, I know I can do it. I know I can do it. I just got to figure out how to do that every time. So make mistakes, but let somebody help you with the mistakes, guys. That's my job. My job is to help you work through any challenge that you are having so that you can not have to endure that challenge. Shane, let's see what you did, brother. Shane says, Mark, the market is so stinking repeatable. When I have strong triggers, when there's absolutely nothing in the way, I'll take a pullback to an area inside of triggers and I'll make some money. And you said divergence down and magenta one-to-ones, not kind of scary a bit, not comfortable into trading them. Gino, I'm not going to read that out loud, but that's awesome. And it's true. It is true. So check it out. And I'll tell you what, this has also got to be a byproduct of the trust in the system, Shane. So let's go at it. And let's use this, because I really think, even if you're using the automated system, and man, I'll tell you right now, I'm the biggest fan of the automated system because it does the heavy lifting for you. Can you see that you had the best momentum look ever, Shane? I know you can, but this is rhetorical for everyone in the room. The momentum is 100%. Strong triggers, absolutely perfect. Not a worry in the world. There is nothing in the way, which means that the path is as clear as the path could ever be. Shane, this is hands down the sexiest look I could ever have on a large chart. And wild horses are going to have trouble keeping me out of a trade unless there's something horribly wrong on my small chart. I want you to see something, Shane. And the reason your automated system initiated a trade, look at that area inside of triggers. Do you see it? And there it is again. And there it is again. And it is 3 textbook entries. And this is the recipe for success. And now, Shane, I'm going to address the camouflaged message down here in red on a red background. That's okay. And it did. It did. I'm gonna talk about a couple things. And Shane, what this is probably some of the most common stuff that people do in the beginning. And I'm going to tighten up this a little bit, so hopefully it comes together a little bigger. So if momentum is defined on a large chart, does one small loss of momentum outweigh the big crowd saying, hey, we're going down with the force of 1,000 angry elephants? And a lot of times, guys, we'll let that talk us out of it. I've done it a million times, Shane. This is why I know this lesson by heart. And then sometimes you see a second divergence. And you start thinking to yourself, oh no, everything's changing. This isn't good. But man, momentum is defined on the large chart, because when your 34.5 says that you have the best momentum look ever, it's going to be hard to stop, Shane. And the only time on a small chart I'll ever let divergence talk me out of a trade is 3 divergences in the same price range. And if you go back to the rules, and let me go back to the rules real quick, because I want to pull this straight out of the user guide, and I want you to see it. 3 divergences in the same price range is the only small chart termination condition. Well, Robert, what a timely question. Are we talking about NinjaTrader or TradingView, my friend? Okay, cool. So this is perfect. So let me preface it with when I have odds favorable momentum, when I have a clear path. And Robert, I'm saying this because the high probability trend trade is not the only trade, right? The high probability trend trade means that you have the best look on a large chart that you could ever hope for. You've got all of the momentum and absolutely nothing in the way. Does that make sense? And guys, I have to clarify that because if it's only the potential to break, it's a very different scenario. So everybody's on base. We have the greatest look on the large chart we could ever hope for, the same one that Shane showed us in his chart. There is one time where I won't take that entry, that final entry, and that's 3 divergences in the same price range because divergence is a loss of momentum. And through countless hours of study and thousands of pictures, a pattern has been recognized that one divergence doesn't scare us, that 2 divergences doesn't faze us, but when that third one prints, the market is more likely to push up a little bit. There you go. It just gave, I love the bot. Got you squared away. So 3 divergences in the same price range becomes the small chart telling you that change may be coming that you can't see on the large chart yet. Shane, does that make sense? So for the highest probability trend trade, this is my only small chart termination. Same at a high. Now this becomes even more powerful if the small triggers are inside of the large triggers, because we all know that is weakness from rule number 1. And it becomes more powerful still when the final divergence is higher than the previous. That's a little head and shoulders pattern, or lower than the previous from a high. So I'll give you this picture in the room, but man, if it is perfect, and this is what you can start doing as you begin to look for your trades. When it is perfect on the large chart and you see momentum and you see path, they got you Wednesday. I want you to say, and I want you to say it out loud, Shane, I want your pets to know this rule. When you see, and I'm going to do this, when I see, I'm going to even try to get it right and spell correctly. When I see strong triggers and a clear path on my large chart, guys, just commit this to memory. The only way I will ever skip the perfect trend trade entry is if I have 3 divergences in the same price range on my small chart. Does that make sense? So totally awesome. And now, Shane, we're going to take another lesson. I got you. Here, let me just give you the picture, and you don't even have to screenshot it. There you go. Now, we're going to do it one more time. You ready? Mark in his lessons. Here he goes. When I have strong triggers, Shane, when I have a clear path, when it is the perfect chart, am I really going to let a small swing 1-to-1 talk me out of? Am I going to let these stupid little pink dots override everything good on the large chart? If you think about it like that, it almost doesn't even make sense. But when you're worried about losing, and guys, I was terrified of losing in the beginning. When you're so scared of losing that you forget, and I'm not saying this is what you're doing, Shane. I'm not accusing you of anything. But when you're so terrified that you could potentially lose a trade, you'll look for every reason to not take a trade, right? You'll never ask that cute girl to the dance because what if she says no? Wayne Gretzky will tell you that you miss every shot you don't take. So when you're going after a trade, guys, and you're speaking in terms of advantages, I want you to say, I have momentum. My path is clear. I have the best of the best. Um, and you have to get to a point where you believe that that's going to be hard to stop. You have to get to a point where you are convinced without question. Sorry, I'm doing sneaky stuff on the other side. Where when I see that look, when I'm excited about that look, when I have that look, Shane, that's what your market is doing. That's what's going on. You've got this vision in your head that just says, oh my gosh, it just doesn't get better than this. What a great look. And then what happens is you start saying, there's no way that VW Bug is going to stop that big bad truck. There's no way that one loss of momentum is going to undo everything great on this chart. And you start to really begin to embrace the idea that it's the advantages that create a trade. And you have the recipe to define them. And your system only enters based on advantages. John and I worked really hard on making sure that it wasn't all willy-nilly. So what a great question. And hopefully what a great lesson for you guys. Does that make sense, Shane? And now the other part of being a day trader, guys, and having a methodology is you've got to learn to trust it. And Shane, that wonderful woman standing behind you in your picture, you didn't trust her on day one. You didn't give her the keys to your Camaro and your apartment key and leave 50 bucks on the counter. You just met her. She's pretty, she smells nice, but you're not there yet, right? So, well, maybe you did. Maybe you did. But over time, spending more time with her, realizing how amazing she is, realizing through building a relationship that you can, in fact, trust her, she's probably got the keys to your Camaro, right? And guys, you've got to go through that repetition. You've got to take these pictures. You've got to study these looks. You've got to study these looks. And then it's crazy because what happens is you look at your chart and you look at the large chart first. And you say, oh my gosh, it can't get any better than this. And you start ignoring divergences. And you start saying one divergence isn't going to change my life. It can't undo everything good on that large chart. And then the same picture that I show every morning, you're going to learn to ignore those yellow one-to-ones because that's the bounce you need to get right back. And until you see those three divergences, Shane, you're like, I'm in this one, baby, 100%. What a great lesson. Guys, trust is hard. Trust is difficult. Trust takes time. And that's one of the reasons, while keeping it very simple in the beginning, while not looking for all the trades, but rather the best trades, tends to get you guys where you want to be the fastest. Thank you for that lesson, Shane. These are why class is such a good class, guys, because I don't know that Shane needs help with that, right? I don't. But Shane told me he did, and he got every bit he needed. So there's a strong top. There's odds favorable momentum. Pete, you take the jump in without momentum. Guys, you can't take a momentum trade without momentum. It's impossible. And let's do a little compare and contrast, right? Without momentum, we get a retracement to the perfect trend trade. With momentum, the darn thing just won't stop. And this is the patience piece, guys. This is the patience piece. And you didn't even get below trouble, anything that could create a bounce. You just jumped in, jumped the fudge in. That's cool. But guys, if you're just going to jump the fudge in, have a couple safety measures in place, right? We've all heard the story. Our moms told us the story of the kid that dove into the water that didn't check the depth first, right? Make sure you have the advantage before you make yourself vulnerable. Great trade, Pete. Nice hold. Because, and let me get to the other side of that so you guys don't think I'm busting Pete's chops. Pete knows that if this fails, it's probably going to turn into that based on this look. Pete's willing to take a shot because if it doesn't, he's going to be in the trade. But if it does, he knows exactly where his stop goes. Pete couldn't care less. Pete trusts the large chart, and I love it, based on the large chart. Pete has developed a relationship with the large chart to where Pete embraces and loves the large chart advantages. They have trust with one another. So Pete gets a little loose every now and then, knowing that it's because he loves the large chart. Way to keep that relationship alive, Pete. And guys, that's where you're going. But until you get there, it's tough. All right. Did not work. Boaz. Man. All right, guys, let's go through it. This is an important lesson as well. This is a hugely important lesson. Are you ready, Boaz? If a trade is momentum, clear path and entry. And guys, help me out with this. Was there momentum? Smalls below the large, space between, everything cranking down? Boaz, I have your back 100% in a court of law that you had momentum. And was there a clear path? Guys, these little pink 1-to-1s don't come into play on these smaller markets, 13-2. So Boaz, once again, as your lawyer, I will say, without question, no hesitation, the utmost certainty, you had a clear path. And guys, I use this, and I don't use this term loosely. That's a sexy large chart. That's a good-looking large chart. That's a large chart riddled with advantages. But Boaz, here's where I get you, man. I know it. Just brace yourself. Did you have an area in... Oh, son of a gun. Boaz, you had the recipe for a trade that you can prove wins more than it loses. You have a trade, hold on, let's get rid of sexy here, that if you went back and studied this exact look and had the exact same situation, the exact same rules met, the exact same entry, you could prove that it wins 70 to 80% of the time. Now Boaz, this one didn't win, did it? So here's the question that you're going to have to ask yourself, guys. Did I make a mistake? And if you did, that's okay. Go back, reanalyze, look at it. Make sure that the read was a good read. And the other option, guys, if you didn't make a mistake, was it just part of the 20%? So Boaz, which one do you think it is? Did you make a mistake with momentum path and entry, or is it a part of the 20%? And guys, do you remember when I told you if they want my money, they're going to have to get through all the advantages? This is another reason that posting in the room is huge, because Boaz has experience. Boaz knows this is just a normal part of the positive equity curve. But if you are brand new, you start pining on the thought that you missed a trade or messed up a trade or lost a trade. And then Shane, you start blaming it on this one divergence. You start blaming it on weak triggers. You start blaming it on small triggers that turned up against you. And guys, the reality is this is a beautiful trade. And then Boaz, the only thing I can say is you're in at, where are you in at? 90? 39? It's hard to tell on that chart. Let's make it bigger because I'm old. So guys, this is the only coaching I can give on this trade. And Boaz, you're in at 30.3, right at the mid-band right inside. Your advantage is gone, 39.3. Your advantage is gone at 39.7, 39.8. And there's no reason to give that much money back when you're beyond everything good. And Boaz, you're right. Wouldn't it be better to take a 4-tick hickey, and if you want to re-enter, go ahead, instead of giving up $200 to $300 when you already knew that the trade failed? Does that make sense, Boaz? And that's management. And that difference, that 3 or 4 points, that $30 or $40, I love doing this. John Novak did this for me. If you make that tiny little management, right, and $40 a day times 252 trading days is a $10,000 difference in your bottom line. From that $40 difference by not being willing to take the loser when the advantages are gone. So I'm not telling you how to manage your trades, but guys, there's a reason that we talk about stops where the market shouldn't go. We don't have to take big losers. We're better than that. Boaz, you're so good at entries. Momentum is down. The path is clear. 2 out of 3. I like this. 2 out of 3. And now Boaz, the only challenge, and again, coaching moment. Some of you are going to put all of your eggs in one basket, hoping that a moving average is capable of stopping a market. Does that make sense? No areas inside of triggers, guys. It's already blown through everything good. And when I get up here, Boaz, who's to say, what's to say, and your strong trending market is over the second the reversal bar hits. Who's to say they're not going to this midband? Who's to say they're not going all the way up to this fib, right? So what you're doing is you're using that 4-letter word, I hope. I sure hope a midband can stop a market. Yeah, right up until the reversal bar. And once the reversal bar prints, your strong trending market is over. But before the reversal bar, you're absolutely right. Sell the midband until it doesn't work. Or you can force it to confirm. You could force that market to confirm the move. And it's a 2 or 3 tick difference, Boaz, isn't it? 2 or 3 tick difference. But this one gives you a reversal bar to put your stop behind. And that's where it just goes back to language again, is once I get to the wrong side of the triggers, I don't know if, when, or where that market's going to stop. So if I force them to confirm, I've got a place to put my stop. And guys, everybody trades differently. And Boaz, you trade wonderfully. And when I talk about these lessons, guys, and I go through it, I'm not trying to change anything. I'm certainly not trying to tell you how to trade. What I am doing is I'm saying, hey, let's consider this. Let's consider this idea. All right. So we were talking about divergences. We were talking about divergences earlier. And who asked the question? Hold on. We had Shane. Robert Mark. What do we look for on a small chart to keep us out of a trade? Robert Mark, are you with me in here? And then even Shane, everybody, guys, this is a small chart lesson. When you understand what kind of trade you're in, it sets you up for management. So let's go through the process of speaking in terms of advantages. Does everybody see that this trade had momentum? That there was a separation, that the colors matched, that everything was down and life is good, right? Now, this is the important part, guys. And if you start looking for entries before you see advantages, does everybody see that only 2 trigger lines made it through this divergence low? Is that a clear path? What do you guys think? Only 2 trigger lines below the divergence low. Guys, you've got to say, you have to be able to say, it's only the potential. It's only the potential. It's not rules met. Rule 2 is not met. But do you guys remember that idea that 2 out of 3, we can still take a trade, manage it assertively? Does that make sense, everybody? And without hesitation, I tell you, there's an area inside of triggers, guys. Can we say that we have 2 out of 3? That life is good. Let's take a medium probability trade. Let's manage it. Does that make sense, everybody? Shane, Robert, Mark, are you with me so far? Now check this out. What is divergence? Every morning when I identify, I say divergence is a loss of momentum. So for the perfect trade, that loss of momentum, I love it. It gets me back to the midband. It sets me up for an entry. But on a 50-50 trade, when it's only the potential, when it's not high probability, when it's not my best of the best, That divergence tells me that somebody's fighting, that somebody doesn't want that market to go down, that somebody with enough money to push it up a little bit stole some momentum. Does that make sense? And I'll cover up a third of my momentum. So now I'm working with momentum in an entry area. Robert, Mark, Shane, do you remember that when the small triggers work their way inside of the large triggers, it lets you know that momentum is slowing? It's not at all strong triggers, right? So I'm losing even more momentum through my small chart read. So where I once had momentum in an entry area and life was pretty good, my small chart's telling me that you've got an entry area. And this divergence, these weak triggers, are the biggest killer of a trade that only has the potential to break an area. So Robert, Mark, knowing what kind of trade you're in dictates things that may keep you out. And divergence, when you guys go to the KISS plan that I give you that optimizes your chances of success, that's not it. Here we go. And you go to that 50-50 trade. It insists that you have a strong top or bottom, a reversal, a termination that reverses the market, because that optimizes your chances of success. It tells you you have to have 3 out of 4 of the trigger lines through, because that optimizes your chances of success. Odds favorable momentum on both charts, because it optimizes your chances of success, and absolutely no divergence. And I'm so adamant on that for the new user that I remind you, no divergence. And it's such a big deal that your management for that trade says if divergence prints, GTFO, baby. So it's important, guys, that you understand what kind of trades you're taking, so you know the rules for entry, so you know the rules for management. And we're just going to go back into it. If, we're going to do this real quick. If you have a, did I not take that picture? I thought I did, maybe not. There we go. If you have a high probability trend trade look and you let divergence talk you out, well, then you've just made a mistake and you've missed a beautiful trade. Conversely, if it's only a medium probability trend trade and you're treating it as though it's high, you just got run the fudge over because the rules weren't met for the trade that you were taking. Does that make sense? And I think that was a pretty good segue. And that's a beautiful example of how knowing what you're up against gives you the ability to manage, guys. And this is why brand new users keeping their focus on the highest chance of success initially. Because if every time I look at my chart, I see strong triggers, no terminations in an entry, I'm training myself to believe that I'm damn near invincible, at least 70% invincible, right, with that look. And as soon as I see an advantage go away, I really start to lean on the other two, guys. And that's where being comfortable with the chart read really works its way into it. And that's why every day my focus isn't on telling you guys that you can get rich in your first 30 days. But if you learn the looks, that have the highest chance of success, if you believe that with that much momentum and with 3 triggers through and with no divergence, that mid-band is more likely to create a bounce than it's not, you start finding ways to make money, guys. And then you start finding ways to do it better, more consistently, right? So there's 2 triggers through. There's your divergence. Do you see it? Holy smokes. This becomes a repeatable pattern. There is, I think, 3 triggers through, and there's a divergence and a second divergence, and not even 2 triggers through, and your small chart gives you 3 divergences, telling you that the game is over. And guys, trading is about repetition. Trading is about understanding that the market does the same darn thing every day. And with a little bit of understanding, with a little bit of practice, with hopefully an awful lot of feedback, it's like having a crystal ball, guys. You can predict what the market is most likely to do. You can predict where the market is most likely to go. You can say, that's not a clear path. Do you guys see it? That's not a clear path. And that divergence tells me that it probably isn't going to be. And that's not a clear path. And I didn't even need divergence because my triggers didn't break. It absolutely will, Robert Mark, 100%. And the great thing is, guys, is I don't make stuff up in the room. I got in trouble for that. Not really. But all of these concepts, guys, everything that I talk about every day is in the trading guide. And if you go to the NinjaTrader 8, there's your indicators. And there's exactly how you're going to define momentum. Whoop, there it is. Come on, baby. And there's exactly how to define termination conditions. And there's exactly how to find your amazing entries. And that's exactly what creates a high probability trade. And there's even stuff on management. And it's amazing because it's not that it's any new concepts or anything that we hide from you guys. It's that most of us, and I'm raising my hand here, and this is my admission of guilt, 90% of me, 90% of me won't put the effort into learning 3 advantages. 90% of me won't take the time to go take pictures of strong triggers, to annotate why they're strong triggers, to define why they create an advantage, to commit them to memory, and lean on them. And 90% of the me's in the world won't do it with termination conditions or clear path. And 90% of the me's in the world, guys, won't do the work to learn the basics. They just want the money. And congratulations, you're human if that sounds like something that you're doing. Profits are a byproduct of process, guys. Hey, Lava Lamp, in all your groovy splendor. Why are my charts delayed? Says to describe the data package house. So you need to go through with NinjaTrader. NinjaTrader provides the data that you need, which means that you need to pay NinjaTrader for data, Lava Lamp. Lifetime for Nexgen, we are not a data provider. You would have to, you can't keep resetting the simulator. NinjaTrader wants your money, Lava. You can fund a NinjaTrader account with $50. And then after you fund that account for $12 a month, I don't have it yet because the video is still going, Robert. But if you go to here, let me get you this link real quick. Sorry, Lava. I promise I will be right back for you on this before these guys split. Here is the link to the Nexgen YouTube page. Everything is under live. And guys, every day in shorts, I post like a highlight reel from the room. Go through and look at these and notice that everybody that's posting winners annotates charts. So what you're going to want to do, Lava Lamp, let me see if I can do this without giving away all my passwords and stuff, right? You're going to want to come in and you're going to want to, oops, not found. I don't know why. You're going to need to open an account. I've got $55 in mine because I don't trade my NinjaTrader account. And that $55 gives me the platform. By having it in there, I don't have to buy the platform. And then what you'll have to do is you'll have to have a market data subscription. And mine is $12 a month for the live data. So you'll need to do that. Now, I don't advocate doing this because maybe it's a little dishonest. But Lava Lamp, if you had a different email address and you requested another demo through NinjaTrader, well, they would send you credentials to get you another demo account while you set that up. And if you have 25 email addresses, I suppose some people could do it 25 times. But that's what you need there is that live data. But it's only $12 a month. And then you're good. So let me know if I can help with that. But reaching out to NinjaTrader is what you really want to do. Odds favorable momentum, 3 triggers through, pull back to the area. You went short. How can I get my buy or sell? Okay. Did you see that you went short when everything's set up, you're probably just practicing, having fun, I'm going to assume. That is the quickest way to drain an account. But if you go long right here at the area inside of triggers, that's the quickest way to fill an account. What you're going to want to do, Lava, is on your large chart, right click and go to data series. And from data series all the way down at the bottom where it says plot executions, you're going to want to go to that drop down menu and get text and marker. And once you do that, hit apply, hit OK, and it'll put your entries over here on your large chart as well, so you can see them. And guys, I love helping. I'll give you every answer that I know, I promise you. But if it's the weekend, if I'm not here, if I get hit by a bus, guys, straight from the Nexgen page, user guide is all of your NinjaTrader how-tos. And I'm not done with you yet, Lava Lamp. All of your NinjaTrader how-tos. And there's your ATM, how to set up those stops and targets. And then from the trading guide is all the rules. So your second question was, how do I add the KISS strategy here? So you're going to have to build it. I need John to build it into the workspaces, but until he does that, I'm going to give you two ways. I'm going to give you guys the easy way, which is where I just give you a fish and you don't have to worry about casting off into the waters. So I'm going to go to my templates real quick, and I'm going to go to my ATM strategies, and I'm going to put my KISS plan strategies in a zip file for you guys. I'm going to find it. So the one that says KISS is, there's two files in the zip file that I'm about to give you. The one that says KISS ES is designed specifically for the ES, $100 to $200 profits. The one that says just KISS is designed for crude oil. Now you're going to have to take those zip files and you will have to extract them. And this is where you're going to extract them. Documents, NinjaTrader templates, ATM strategy. So that's where you're going to put those. Guys, these are designed for the S&P and crude oil. These are not NASDAQ templates. These are not built for the volatility of the NASDAQ. If you wanted to build them on your own, the ATM strategy instructions will give it to you. If you're just like, I just want to learn, Mark, because learning is awesome, what you're going to have to do is you're going to have to build one, which means that you're going to go to your drop down and you're going to have to go to custom. And once you go to custom, so this is crude oil. My order quantity is 2 because the KISS plan revolves around 2 contracts, which means that I have to have 2 targets, and I'll add a second target, 1 contract per each. Now, when you talk about a stop loss, guys, it works in ticks. Your initial stop loss is not a number, and it's really important that you guys understand this. Your stop loss is not a number. Your stop loss is where the market should not go. 12 gives you time to put your stop where the market should not go. Does that make sense? I can't tell you how many times I see people get stopped out at areas inside of triggers because they say, well, my stop was 12 ticks. I really want you guys to latch on to the idea that stops go where the market should not. Now, your first profit target in crude oil, 10 ticks produces $100. 20 ticks, not 210. 20 ticks is a $200 winner, guys. So you'll put your stop where the market shouldn't. First target comes off at 10. Second target comes off at 200. So you save it as a template, and I'm just going to overwrite it. Call it KISS. You can put crude oil on the back end of it. Click OK. And now, if I enter the market, and I'm not saying this is a trade, guys. If I buy the market with that ATM strategy in place, my stops and targets are in place. And guys, just because they're there doesn't mean you have to leave them there. Does everybody see this giant red fib that could stop the market cold in its tracks? We sure do, Mark. Awesome. It's okay to click that green line and put it below that fib instead of hoping that the market can break that stuff. Nope, that was a one-time deal. If they hit your first target, come on, help me out, market. If they hit your first target, one contract is automatically removed. The ATM strategy adjusts to one other contract. If it hits your stop, it'll pull you out of the market. So every time you enter a trade, you can have stops and targets in place. For the NASDAQ 13.2, tick replay should be checked. I think so because, well, it has to be, Sam, because watch what happens if I don't have tick replay checked. I like the Y's. So if I uncheck tick replay, guys, and apply it, my synthetic triggers go away. How am I going to, oh, they didn't. What the heck? Well, they should have. Oh, because it's built into the template, I think. But my time frames, my other time frame fibs go away. I guess the synthetics do stay. But what it does is it gives you the best picture. If you're using the automated system, yeah, synthetic fibs go away. It's that tick data that lets you see the fibs from other time frames. Now, Sam, are you using the automated system? Are you using the one that... nice, Lacanudo. Okay, so when you're using the automated system, tick data is not put in place. But I want you guys to see something. When I take tick data off of my large chart, and Sam, I'm going to tell you, I don't give trading advice, but if I don't have synthetic fibs over here, I'm not giving myself the best picture. If I don't have synthetic fibs on my large chart, man, I'm not giving myself the highest chance of success, because on your large chart, guys, when tick data is in play, you will see fibs from the 5-1, you'll see fibs from the 13-2, you'll see fibs from the 21-3. Or if it's NASDAQ, Sam, you'll see fibs from the 13-2, from the 34-5. It does take a lot of resources, absolutely. And you'll see them from the native. So Sam, one of the things you can do, if you don't want to use up those resources, and you're running them on your large chart, you can say, oh man, there's a fib that won't show up on my large chart. Let me put a line there. There's a fib that won't show up on my large chart. Let me put a line there. And what that does, is it gives you, it's a little cheat. It's a little cheat. Dang it, I keep doing the wrong one. Where you can kind of put your synthetics, you can look over, make sure they're there. Or if you have it in you, if you have the resources to do it, you can say my small chart with tick data on, only using half the resources, has a fib. I have to believe that there's a fib right there, right? And if my small chart has a fib at 61.90, I'm not going to see it without tick data. I have to believe 100% that this fib exists on the large chart. And look what happened right there to the freaking tick. And that's why there are 3 time frames on the large chart. So just because you take them off doesn't mean they don't exist. Licanudo, take a picture, man. Let's see it. 520 and 2 entries. How did you do on following the rules? Did you try to follow the trend trade rules? Does that make sense, Sam? Cool. Perfect. I love having a big picture. And it's amazing how accurate the software can be when you use all the resources. Pete, strong triggers, clear path, pull back to an area inside of triggers, money, Expectations or the fib, money. Beautiful trade. Guys, that's it. That's the pattern. We just talked about it. Termination, full reversal, odds favorable, room to targets, pull back to the midband inside of triggers, and there it goes off to Fibsville, population U. That's your pattern, guys. One divergence doesn't scare me. That's a high probability trend trade. Good stuff. You guys are amazing. You know that? So proud of you. All right. Let's go see if any rules are being met. Great lessons. All right, large chart read, guys. Do you want to do it with me? Do you guys want to see exactly what I see when I look for a trade? Exactly what goes through my brain when I'm looking for a trade? Exactly how you can look at your charts, and if you start to do this every time, you will be floored. All right. Hey, Mark, what direction is the market going? Well, Mark, the market is going up because the background is green. I always answer this question first, guys, because I want to trade with the market. Mark, do you have strong triggers? Licanudo, do I have strong triggers? Am I saying that right? That's fun to say. Are the large up? Are the small up? Is there space between? What do you think? Is that a market where I can say absolutely the odds are favorable for that market to continue up? If my answer is yes, and just a heads up, guys, my answer is yes, then I have to ask myself, oh, it's without question, Licanudo. Smalls above the large, space between, life is good. But then I have to ask myself, before I ever look at this chart, I have to ask myself, do I have a clear path? And guys, why am I doing this? Because if there's only 2 triggers above, it's just potential. If there's only 1 trigger above, it's just potential. If it's only 3 trigger lines above, it's just potential. So what I'm saying to myself is I'm saying the market is up. I do have strong triggers. I only have 2 triggers through. Not my best look. If I choose to enter, if I choose to even go look for an entry, I'll have to manage it assertively because it's not perfect. Does that make sense, everybody? First it's up, then it's strength. It's not a clear path. Then I'll go to the small chart. Do I have an area inside of triggers? And guys, it's without a question I do. And if I make the choice to enter the market at an area inside of triggers, guys, I have to believe with no uncertainty that it's not a high probability trend trade because my path isn't clear. And do you guys remember that divergence on a medium probability trend trade is the biggest killer? So I might cancel that out and make sure that divergence doesn't print. Because if divergence prints, I can't follow my plan. And guys, I go through this every time. If I'm looking for a trade, there is no deviation. Do I have separation between the small and large? I don't. I know I don't have the momentum I'm looking for to push the market. Did price reach an area and none of the triggers break? Holy crap, guys. I don't have momentum or a clear path. Why on God's green earth am I looking for a trade when I don't have anything to push the market up and I don't have anywhere to go because it just hit a brick wall? Does that make sense? And now my small chart's even telling me the sellers are fighting right at that key area that could stop the market without momentum to push it in. If I took an entry, I can't even define an entry because I don't have areas inside of triggers. How many things can you identify wrong with a trade and still feel compelled to take the trade? Only you can answer that question. But Licanudo, do you see how I did that? First it's trend, then it's momentum, then it's path, then it's entry. And the moment you start playing shell game and changing or being willing to get into the mid-band because you think mid-bands are pretty, look at you getting run the fudge over. Pretty cool, right? That's a live example of how 3 simple rules keep you focused on the best of the best. How 3 simple rules identify the situation that you're in. And when none of them, it's not even low probability. When it's none of them, there is a 12-year-old girl rolling her eyes at you with her arms folded, calling you dummy head or something like that. That's what I want you to picture. Does that make sense, everybody? But if you train yourself, do I have momentum? Is it a clear path? Can I define an entry? If you require that process every time, you don't hope a mid-band holds. You don't think that just jumping into a fib is your best chance of success, right? You start looking for reasons that trade might fail, that your advantages may be going away. And that's kind of what we do every day, guys. Miss Claire, aggressive. Triggers are down. Strong side of the triggers. But you had a termination. And Claire, you already reached an area that can stop the market. And your smalls got above the large. And you say close above 2 triggers. It's a rule that you made up, and I'm glad it worked out. And they still came against you all the way down to that VWAP, all the way down to that termination condition. So Claire says, I can't go short. There's absolutely nowhere to go. My small chart is telling me that it wants to go long. I'm going to try to go long with it from the termination. So it's a counter trend trade. Claire calls it aggressive. Why? Not because Claire doesn't have a plan, not because Claire isn't brilliant and weighing out advantages, because Claire knows without question that the easiest way to drain an account, the path to financial suicide, is fighting strong triggers. And Claire says, I am fighting strong triggers, but I'm taking enough advantages on my small chart to take a shot from an area that says absolutely no more shorts. Claire, I love the trade. I love the patience on the trade. I love the quick profit on the trade. And I think even I'm getting break even pretty quick because it is counter trend. But aggressive? No. Calculated? Absolutely. Does that make sense, Claire? And you take the first one off at trouble. And guys, when terminations stop a market, you see this a lot. And Claire, what you took was just a good looking HVA trade from the perfect termination and letting the small chart slow down before you took it. I love everything about this. Nicely done. Guys, that is what we call the HVA trade. And Claire, if you wanted to be even a little more conservative, did you do that? Close above the triggers? Was that your entry, the white bar? That's it right there. Let it close above, get to the weak side of those small triggers, and look, you have odds favorable momentum at this point. And you're on the weak side of the triggers, and you've got room to trouble. Just outstanding. And then it turns into a momentum style look, which just confirms that they're likely to go up more. Everything about it, Claire. You are my big move holder. And guys, they're stuck. For my new users, if you're crude oil traders, crude oil pretty much dies right at the end of this classroom. And it takes 38 days for things to happen. A lot of my crude oil traders will come over and switch to the S&P after the lunch break if you're still looking for trades, because it's going to typically move a little bit more. Trading view, triggers are up. Strong side of the triggers. There's your pullback to the area. There's your close on the correct side, directly into trouble, which means that the rules aren't met for a trend trade because there's nowhere for that trade to go. S&P, triggers up, room to trouble, strong side. There's your pullback. There's your close above. This one does have room. If you're in this trade, your initial stop is below that low pivot. If you're thinking about managing this trade, your small triggers just rolled up. That's nice. That's a pretty big look, but your large chart says up. Your large chart is strong triggers. You defined an entry. Doesn't mean that it'll win, guys, but it means that you at least followed rules, which is kind of a big deal, I think. And look how that area stopped it. Do you guys see it? Why is rule number 2 for the trend trade have room to targets? Why is rule number one for a trend trade? Have room to targets. Because when there's something in the way, this happens more often than it doesn't. All right, guys. Oh, it's 11:40. I need about a minute and a half, and then I will be back once my hands are washed. I'm gonna go talk to a man about a thing. Right back, guys. All right, guys, let's finish up real quick. Whew, what a Friday. Everyone have a great weekend. If you leave earlier, I'm supposed to get the system lease software done over the weekend. Fingers crossed. Once tested out, probably second half of next week, guys, we will start. That's amazing. And guys, if you don't know this already, when John talks about that system, what John is saying is that Nexgen has automated the absolute best of the best. If you are jumpy, all roads lead to Rome. Are you still in here? I apologize, guys. This was posted in my room. Oh, nope, we already answered that one. You just changed your name? Used to be Lava Lamp. Okay. I was like, wait a minute, I missed one. So guys, that's coming. Um, and small chart management is something that we talk about in this room a lot. There's a lot of great information about it. But it's also something that is on the table because I say it daily till I'm blue in the face. Management is where fortunes are made, and management is where fortunes are lost. And guys, the better you learn how to manage your trades, um, the better you learn how to manage your trades, the easier it becomes. And great entries create very manageable trades, without a doubt. So I'm excited, John.